The Monetary Policy Committee of the Bank of Namibia has decided to keep the repo rate unchanged at 3.75%, with the view that the set rate remains appropriate in supporting domestic economic activity, while simultaneously safeguarding the link between the Namibia dollar and the rand. Joining me in studio this morning is economic analyst Salomo Hei. Good morning, Salomo. Thank you so much for joining us this morning.
Good morning, and thank you for having me.
Salomo, let's look at the monetary policy announcement yesterday by the central bank. What was the main message? What is your take-home message from this?
Well, what the message essentially said that the global economic environment is improving. If you look at the data from 2020, quarter 4, you saw that actually when the cycle started turning, where the outlook started changing, and where economic activity picked up. So we then, and with this in mind, obviously the monetary policy then decided not to cut interest rates, and the improvement in the outlook was essentially as a consequence of what happened with the production of the vaccine, industrial production coming back, and travel restrictions slowly being eased, and then obviously the accommodative monetary policy, which actually is unconventional in the majority of the economies. And what then happened was, as a consequence of that, you could see that the public health was responding much better to the pandemic in terms of when at the advent itself. So the whole response and the sort of outlook in managing the crisis was then improved considerably from an economic perspective, and subsequently this is why the aggressive stance in terms of cutting the interest rate is sort of being kept and not being cut, especially in the Namibian context. And what you also see is that there are certain countries that have responded much better in terms of stemming the tide against the pandemic, and it's precisely because of the fiscal stimulus in terms of the size and the aggressive response in terms of the monetary policy in those respective countries. And by that we mean that if you take the example of a country like New Zealand, for instance, and they are perceived to be COVID-free as we speak, and they were able to engage on a very aggressive asset purchasing program. Essentially what that means is that they bought bonds directly from government as a central bank, and this is some of the non-conventional measures that the monetary policy spoke to. There is a bit of an upside risk in terms of inflation, but it's really not a concern at this stage, and it's being driven by the food and beverage sector. And that's really as a consequence again of the supply issues, in terms of it's not as easy as it was previously to be able to bring food in different jurisdictions as it was before. So essentially from that aspect is why they're not cutting, but at the same time saying that it's a bit premature to actually raise the rates at this stage.
Now, I'm glad you mentioned the food and beverage category, and we'll get into that a little bit later. But what I want to focus right now is the repo rate that remained unchanged at 3.75%. Can we truly, honestly say that this has actually supported our economic growth and development?
Well, if you look at it and carefully, the repo rate is an interest rate in terms of the cost or the cost of or the charges that you pay on bank products or mortgages, hire purchase, installments, and that sort of thing. Now, we also know that it's only a handful of people or a handful of businesses that actually have these facilities or these products with the banks, right? So the majority of them don't have hire purchases, installments, or even mortgages, right? So in a sense, the question that you are asking is, can we do more outside of the interest rate? Absolutely, because the interest rate is really a targeted approach in terms of trying to bring relief to those that are currently have facilities with financial institutions, and at the same time also assist be it investors in terms of what they have as savings or investments in one or the other financial institutions. So it's not really the beginning and the end. Could we have done more? I think so. The example that I gave as it relates to New Zealand, for instance, I mean, I think there could have been some sort of a room for us to even consider some aspects in terms of to what extent can we then intervene in the primary bond market as the central bank or secondary bond market to try and get the economy going again by putting money into on the expenditure side. I mean, the central bank of England is paying for government expenditure, and that's exactly the sort of response that one could have sort of expected outside of just moving the interest rates up and down.
Yeah. Now let's look at the the central bank governor, Johannes Gavagab, has said that economic outlook heavily depends on the COVID-19 vaccine. Now, you did mention the COVID-19, my apologies, vaccine earlier. So what picture does this paint for our economy at this point? Can you just elaborate a bit on that?
So, like I indicated that in quarter 4, 2020,
yes.
The production of the vaccine sort of improved confidence in the global economy, and that sort of spilled over to the emerging economies and developing economies.
Yes.
Now, with the vaccine, it brings a bit of certainty in terms of being able to operate within the environment, to be able to open up because you are vaccinated. But what we also know is that there has been challenges with the vaccine.
Yeah.
I mean, the AstraZeneca issues are well documented in terms of the potential side effects. There have been issues being investigated in Botswana around that very vaccine. There's also issues around the J&J in South Africa,
yeah.
where they have sort of stopped it now.
Yeah.
So the whole issue is also that the vaccine is a good precursor in trying to get the economy going, but whether the vaccine will be successful is really what will ride or on the recovery of the majority of economies. Because if the vaccine is successful, if the vaccine does not have the side effects, and we are able to sort of stem the tide in relation to the pandemic, then you've got an economy that could recover. But what is also important is that our economic challenges or our economic problems, where we find ourselves in, is not necessarily only COVID-induced. These challenges come with us before COVID.
Yeah.
COVID essentially sort of made it worse. So the issue is that the vaccine is all well, but there need to be other policy instruments. There needs to be other structural reforms. There needs to be other initiatives that should try and assist in getting us back on the recovery path, making sure that we create the necessary jobs, making sure that we improve income levels, making sure that we can bring our debt down much quicker through increasing the revenue base and that sort of thing.
Yeah. So you've mentioned the food and beverages industry earlier. The MPC did predict that inflation will hover around 3.2%, and it's especially for this industry that you've mentioned. What's your take on this? For example, how can we as consumers be prepared for this?
Well, there's an increase there's a general increase in prices for the food and beverage sector or basket. And that's precisely because there's a demand for food overall. You know that we import the majority of our foodstuff from our soft commodities from outside.
Yeah.
Now, what then happens is that whether we are on lockdown or whether there are no restrictions, people always eat. And I think when there's a lockdown, we tend to eat more. But one of the biggest issues that's driving these prices up is the inability to move this food quicker as previously. So there's the cost element that then get derived out of that delay in moving the food as quick as it used to be. And so there's also the other inputs into food, which is transportation, and that is a consequence of the increase in oil prices over the past 2 months. Precisely, and once you have got an increase in one of your inputs in terms of the final product, it means that the prices for food will also increase. So essentially, as consumers, we need to brace ourselves. We're in a low growth economic environment. You see that there's an uptick in the food and beverages, the essential commodities. So there's a bit of a difficulty that the households in general are facing as it relates to the increase and the low economic environment. But the silver lining is that the outlook now for Namibia is improving. I mean, I think we projected to grow around 2.6, 2.7 for 2021. We are also aware it's not necessarily the organic growth that one would have wanted to see, but really more a base effect, a broad base effect in terms of a statistical rectification of the data.
Now, sorry, Salomo, for the sake of time, I know that this is a very, very important topic and hoping we will take this up a bit, going forward. But just for the sake of time, do you have any final remarks for our viewers this morning? Well,
there's a need to really move towards promoting entrepreneurship. There's a need to move towards creating opportunities for the immediate sort of operations where you find yourself. There's the Africa Continental Free Trade Area that's opening up, and with that in mind, one would want to encourage Namibians to really take up some of these opportunities and not so much rely on some of the sort of monetary policy positions that might not really impact the majority. You would have wanted to maybe look at it differently. And I mean, there's the rapid finance mechanism from the IMF that we got now, which has improved our import cover for the next 5 months as well. And so from that aspect, the economy is fine, but it's really in the real sector where we really want to see a bit of movement. We want to see that sector grow. We want to see that sector create the necessary jobs to move us forward.
Right. Thank you so much for that very concise explanation there, Salomo. Thank you for joining us this morning. Always a pleasure having you. I hope you have a blessed day.
Thank you for having me.
Well, there you have it. That's Mr. Salomo Hei, who is an economic analyst, speaking to us about the repo rate, which has remained at 3.75%, and also the announcement yesterday by the monetary policy announcement, my apologies, rather, by the central bank, just giving us a bit of clarity on that for our viewers this morning. Please do stay tuned. We'll be right back after this break.